What if I told you that Supermicro computer just reported one of the biggest AI growth stories in the market, and investors still aren't willing to give this stock the valuation you would expect? SMCI is sitting around the mid-30s right now. And here's the weird part. The company generated $39.1 billion in fiscal 2026 revenue. That's up massively from the previous year. Then Q4 revenue came in at $11.1 billion, up 93% year over year. And Supermicro says it received more than $60 billion also new orders during the quarter. So why isn't SMCI trading at 60, 70, or even higher? This is where the story gets interesting, because I don't think the market is ignoring Supermicro's growth. The market is questioning the quality of that growth, and that's a very different thing. Let's break it down. First, the bullish side. Supermicro is sitting directly in the middle of the AI infrastructure boom. NVIDIA can design the world's most powerful AI chips, but somebody still has to turn those chips into complete AI servers and rack-scale systems that data centers can actually deploy. That's where Supermicro comes in, and management isn't giving investors some tiny growth forecast. For fiscal 2027, Supermicro expects revenue between $65 billion and $72 billion. The midpoint is $68.5 billion. Compare that with the $39.1 billion it generated in fiscal 2026. That's an enormous jump. And there's another number that caught my attention. More than $60 billion new orders. Now, before you get too excited, there's a catch. Orders are not the same thing as revenue. That's one of the biggest mistakes investors can make with SMCI. A giant backlog sounds amazing. But eventually Supermicro has to manufacture the systems, deliver them, collect the money, and most importantly, make a decent profit doing it. And that is where the story takes a completely different turn. Look at the gross margin. In the latest quarter, SMCI reported a very impressive 17.5% gross margin. That helped produce 1.62 in GAAP earnings per share and 170 on a non-GAAP basis. Sounds incredible, right? But here's the twist. Management's Q1 fiscal 2027 outlook points to gross margins around the low double digits. In other words, that 17.5% margin may not be the new normal. And this is probably one of the biggest reasons the stock remains relatively cheap. Investors aren't simply asking, how fast can SMCI grow? They're asking, how much money will SMCI actually keep from that growth? Because there's a huge difference between generating $70 billion in revenue with healthy margins and generating $70 billion while fighting for every percentage point of profit. That's the SMCI debate. And personally, I think the market is being cautious for a reason. But I also think there's a potential opportunity here. If Supermicro can grow revenue toward that $65 to $72 billion range while keeping margins from collapsing, the current valuation could start looking very different. At roughly $36 to $37 per share, my base case target would be around $50 to $55. That's not a crazy moonshot. That's simply a scenario where earnings growth continues and investors become more comfortable with the margin story. But here's my bullish case. If SMCI proves that the $60 billion plus order pipeline is converting into revenue and margins remain healthy, I could see the stock pushing toward $65 to $75 over the next major growth cycle. That's where the market could finally start saying, wait a minute, maybe this isn't just an AI server supplier. Maybe Supermicro is becoming a much larger AI infrastructure platform. But I wouldn't ignore the bearish case. If margins fall harder than expected, if cash gets tied up in inventory, if competition from Dell, HPE, and other server companies intensifies, or if those huge orders don't convert into profitable revenue fast enough, SMCI could easily revisit the low 30s. And that's why I don't think this stock is a simple AI is booming, therefore SMCI must go up story. It's more complicated. And honestly, that's what makes it interesting. The market may already believe Supermicro will grow. The real question is whether Supermicro can turn that growth into consistent profits. That's the number I'm watching. So here's my question for you. At around the mid-30s, would you buy SMCI, or do you think the margin problem is still too big? Personally, I'm watching the $50 level first. If SMCI can break above that area with improving margins and strong execution, the $65 to $75 bullish scenario becomes much more interesting. But if margins start falling again, I would rather wait than chase the stock just because everyone is talking about AI. Because in the stock market, the biggest opportunity isn't always the company with the fastest growth. Sometimes it's the company where the market hasn't decided what that growth is actually worth yet. If you enjoyed this breakdown, hit the like button, subscribe for more real-world stock analysis, and tell me your SMCI price target in the comments. 50, 75, or back below 30. I want to know what you think.